Wednesday, Thursday, Friday, stocks were at their lowest at the end of the day. So there was selling throughout, which continued into Thursday and Friday. Even though futures were green both days and the market started out green until 10 a.m. on Thursday and until noon on Friday. All 3 days were red. Then let's recap. Monday, the market was off over 1,000 points to start the day. Ended up rebounding and turning green, which was like the 6th time it's ever happened, something to that extent, which is pretty crazy. But understand, the markets were at an 8-month low on the NASDAQ, so people thought there were good values. Which brings me to the next point. I spoke to my buddy and I said, hey, I'm still kind of confident the market's going lower, even if the Fed says what we're expecting. And he said to me, hey, Matt, we still see opportunities. There are stocks that we've been watching for months and we can't believe they're at these levels. And I said, valuations, in my opinion, are still a little high. So we look at yesterday, right? Tuesday's day of trading. I mentioned on my pre-market video that the SPY could retract to 428. I was a little wrong. It went to 427 and change, and then it traded in a range from 430 to 432. So you can see that right around here. Retracing to 427, then going up to 434, back, and then just in this range until it exploded all the way up to 439, which caught me off guard, and then finished the day at 434, which is where we are now. So in all transparency, I played the SPY. I bought puts thinking the SPY was going down at 435. It then went up to 439. On the way up at 438, I bought more SPY puts. When the SPY dropped end of day, I was profitable, sold, and that's what I do. I wait until tomorrow. You don't have to carry over your trades. It's all about making the right trade, choosing the best entry, having strategy, and executing. All right, so I mentioned the SPY closing at 434 going into Wednesday. Now let me explain, because there were definitely big purchases in the SPY today that were bullish, but there were also big sales that were negative. So what does that mean, Matt? Easy. It means they don't agree. People on Wall Street at some firms say the market hit a bottom. We're going up 6 months from now, because that's how they look at it. They zoom out 6 months from now, 12 months from now. These stocks are going to be 30, 40% higher. Let's buy them. Then you have the other people who are more instant gratification, like myself, who says the market's probably not down enough yet. Let's wait and get a better deal. So let's talk about what the Fed's going to come out and say for the purposes of the market, and we'll talk about what could potentially happen with the SPY exploding or even going down depending on the Fed. So the Fed chairman meets 7 times throughout this year. All right, starting with this 2-day visit. The next meeting is in March. At the end of the meeting, they will come out and they will say, and let's say what's expected first. Expected are 3 rate hikes this year and possibly a 4th. It's like 60-40 on the 4th. And the rate hikes would be in March, July, September, and December if the 4th one happens. Now a rate hike says whatever the interest rate is, let's say it's 0.1, okay? And they raise the rate by 0.25%. They would make it 1.25. It makes it more expensive to borrow. When things are more expensive and it's more expensive, the cost of money is more expensive, it means investing in certain stocks in our market is more expensive. So that's why the rotation back to defense plays, oil plays, companies that have earnings, and then your 4-letter stocks, your NASDAQ stocks, which are getting beat up as the 10-year goes up, will still be in trouble either way. They're meeting 7 times. That means they could possibly raise the rate every time they meet, 7 times. Worst case scenario. We already think it's going to be 4. And I don't think they're going to waver between 3 and 4 tomorrow. So what is the negative? The negative is instead of the first rate hike being in March when they meet next, that would be them coming out tomorrow and saying, we're going to raise rates 0.25%. Could they do it? Yes. Now, if they do it, the market will go down. It will go down pretty hard because people aren't expecting that. They're expecting the Fed to say we're still on track for 3 to 4 rate hikes, with the first one being in March, which is in line. So what else concerns me? Let's just jump real quick. Russia is still on the verge of having a war with Ukraine. Some people think it's certain. Some people say not at all. I went from the not at all camp to thinking it's pretty certain that Vladimir Putin will do something. If that happens, on the day that that happens, the market will go down 2,000 points. So you have that uncertainty. Then you have the Fed tomorrow. So let's say the Fed doesn't do anything and says we're going to wait till March. Okay, again, if they say they're raising rates tomorrow, market will go down. They say they're not doing anything to March, markets will probably go up, but not killer. You have to understand they will probably spike to maybe 445. At that point, I believe they'll see some resistance. So again, the Fed says nothing at 2 o'clock, nothing that's new. The SPY will spike to 445 and people will think there's buying. That nothing goes straight up or down. So there's going to be crazy opportunities. I expect something like this, where you get a spike, a down, and another spike. So whatever direction it's going to go in, don't be fooled at the first movement, because what does the market like to do? Big banks, they love to fool you. Meaning you're waiting on the Fed announcement at 2 p.m. All of a sudden you see some intense buying on the SPY and you're like, they must not change anything. I'm going to buy the SPY. You buy the SPY. A minute later, it shoots down. We've seen that happen many times when the president spoke, when the Fed speaks at 2 o'clock. So let it settle. Wait from 2 to 2:30 before you do anything. If the market is strong at 2:30, it's going to finish up strong all the way to 4 p.m. If the market is shaky at 2:30 and then dumps 4 points on the SPY, let's say it goes from 440 to 435, it's going to dump more. All right. So understand, you don't have to chase. If it goes up, there will be some hesitation and time for you to secure entry. If it goes down, there will be hesitation as well and time for you to secure entry. So me tomorrow, understand psychology behind trading. Are you going to be entering into stocks from 9:30 until 2 p.m. when you're unsure about the market? Unless you see strength and you're sure maybe the Fed tipped its hat to Wall Street, which kind of, led me to believe that happened yesterday, the way the market rebounded. It's almost like Wall Street had inside information where like, yeah, we know the Fed's only going to say what they promised they were going to say on Wednesday and the markets will shoot up. And that's what they were preparing for. So probably smart money. Me, I'm on the sidelines. I'm okay to ride the coattails. Once I see direction, and I'll tell my members about it, my platform members about it, hey, the market's going to recover. It's going to shoot up. Let's get in. We could buy SPY calls. We could buy UVXY puts, or vice versa, which is probably more likely that the market will not like what the Fed's saying, even though it might be standard. Maybe the market was looking for slower tapering or something to that extent. I'm not sure, but pay attention. That's what we're looking for. Like this video, check out the other ones.